the green side is a mere 6 points by TCS. That's clearly not enough. So lack of leadership explains the kind of moves that we're seeing in banking. I think we'll get Vamakshi in the next couple of seconds because a couple of brokers have come out with comments that you have to take note of. Specifically what CLSA, for instance, is saying on an HDFC Bank, where they don't see a quick turnaround in terms of the margin profile. Vamakshi, good that we have you with us. Tell us more about this brokerage commentary, which is really causing this sulk in bank stocks today.
Well, absolutely. Let me first start off with Bernstein. They have highlighted that it is now time to switch back to the private banks. They have said that in the last 3 years, public sector banks have outshone the private sector banks, and this is mainly on account of their superior earnings growth and a narrowing of the growth gap between public sector banks as well as private sector banks. But they believe that they see a less promising trajectory ahead for PSBs as they struggle with weaker deposit growth as well as lower liquidity buffers, and this in turn could result in weaker earnings growth going ahead as compared to their private peers. Other than that, they've also recommended switching back to private sector banks now, and in fact they've downgraded SBI to market perform. However, they've raised the target price in this particular counter to 780 rupees per share. We also have a note coming in from CLSA, like you highlighted earlier. They have highlighted that there are twin challenges on deposits, which includes the high ask rate and a tough environment. Challenges on deposit accretion is also expected to manifest in lower loan growth for the company. Not just that, improving yields could be offset by muted CASA accretion, and this in turn could make the NIM recovery quite gradual. They believe that the NIM recovery could be U-shaped instead of a V-shaped recovery, and going ahead, they've actually trimmed their FY25 and 26 EPS estimates by almost around 5%. Overall, they've downgraded HDFC Bank to outperform from buy, and target price has been cut from 2,050 to 1,650 rupees per share.
Thank you very much for that, Vamakshi. It's a downgrade, but they still have an outperform rating, and the target price at 1650 on HDFC Bank is much higher than the current level of 1425. But it's a rare downgrade that we've seen on HDFC Bank. Dipan Mehta is now with us.